Greetings, beloveds. Let's discuss why one should concentrate on stocks when they are at their best. In other words, at their prime or nothing. But first, let me greet you in the love light of the one infinite creator. Alright, I've been doing breakouts for paid clients for more than 20 years plus full time. So let's talk here. And we can see that there's a stock we're going to be using here for example. So this is recently 2 years of weekly data. So 2 years weekly. And we can see that the stock is essentially all over the place over the last 2 years. But that's not the story. The story has to go back. So this is now all data monthly. And what I just showed you previously was this period right here. This little period. But the truth of it is the stock had an amazing period when it was at its prime, when it was moving. Here in late 2019 and again it happened again in late 2020. Now, the one thing I have to say is that even just by playing breakouts, forget about the minimum requirements, but just by playing breakouts, you avoid owning this stock since 2001. So we're talking about 1 year, 2 year, 3 years, 4 years. The stock really has never really broken out since then. It's tried here in late 2023, but I wouldn't say was a great buy, but anyway. So you avoid all these years of down price action and no upward thrust. So now what I'm talking about here is the two periods here. There's a period here in October of 2019 and a period here in October of 2020 that we were using the charts to tell us that it was prime time to get in the stock. So we're talking about an entry here in October, an entry here in October of the following year. Great percentage moves here. Breakout of, let's call it about 8, went to the highs here of about 60, something in that range. Huge return. And then here another breakout, let's call it in the mid 70s, 75, went as high as 170. So another big run right here. So obviously, as momentum traders, we are more interested in owning stocks that are gonna give us this alpha move. And we don't care about the rest of the price action. We don't care about all of this. In fact, we have no interest. In fact, we actually remove stocks like this from our tracking portfolio because they are not giving us the look that we want. Now, in October again of 2019, October of 2020, let me show you those breakout alerts that I sent to paid clients. October 13th of, let's go back to the 2019 one. So 2019 breakout to clients. That's my website there. And the stock is mentioned as it was moving above. Let me see what the breakout level was at 16.68. All right. We'll take a look at the charts in a moment. And then the 2020 breakout again for clients, that is October 13th, 2020. And you can see the stock is now breaking out above a price of about $74. All right, let's take a look at the charts. So this is the 2019 breakout, October, when I sent out that breakout alert. The stock had been sideways for about 2 weeks. And so that is the minimum requirement that we look for. And so this breakout was really desirable right here. Now, of course, if you look at this at that time, it looks very extended. It definitely does look very extended. But if you look at the minimum requirements, this is the weekly. And I'm using the weekly here in this example because the monthly chart was not fully developed. The stock had just IPO'd here in late 2018. So the monthly charts were lagging a little bit. But you can see that we have our RSI just moving above our threshold of 69.1. Take a look at the MACDs. You can see the MACDs at that time were essentially trading at fresh highs or about to go to fresh highs. But definitely one of them was at fresh highs. So met the minimum requirements, no question about that. And just for added color, we see that it was even outperforming the market at that time in 2019. So all of those were the reasons, one of the many reasons why I sent that breakout alert. And of course, we're talking about this period here, this buy moment here in October. There, boom, before it goes from, let's call it, over just under 18 from our breakout level to about 60 in about 3 months. A great move. Now the next breakout comes the following year in October, and this is October 13th. This is the weekly chart. Of course, the previous breakout is this period right here. That's from the weekly standpoint, that was the entry right there. Bang! And you got a chance of riding this thing. Now it's coming back again 1 year later, it's breaking out. But I was using, this is the weekly, I was using the monthly charts. As you can see from the monthly chart, the breakout level is here now, and we are seeing another breakout. Guess what? This is something to take a very strong consideration for a buy as the RSI is newly moving back above 69.1. We like that. And then take a look at your MACDs. MACDs were lagging a little bit, but remember, this is 2020 when stocks were really taking off, especially in the biotech space. So you give it a little bit of wiggle room. All right. And also we can see that it was just about to break out relative to the market as compared to the S&P 500. So given that the biotech space was very hot, the stock was coming back to breakout. Of course, you have to consider it a buy. And that's where from that breakout level, so this breakout level right here, entry somewhere here, you get a chance of riding this from about 75 to the highs here of 170. And it took about 1, 2, 3 months. A great move. The moral of the story being, you want to only consider the best stocks. In this case, we're talking about especially in 2020 when the entire biotech space or some biotech names were really hot. So the best stocks at their best moments. I am Eric with Mother.com. I leave you as I found you, in the love and in the light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.